After Wednesday's large move, we started to kind of get away a little bit from this 30-minute uptrend. We spent a couple of days pulling in, right back down on the trend, gapping lower this morning. No different pattern than we saw with big moves over the years, where we would have this big uptrend day, people would get maybe caught a little bit shorting it, and then we would drift back down following that. And the best play, what I talked about in our weekly morning meeting here at the firm, was really the best play has been the last couple of years into these pullbacks, finding where moves have started, getting long there, risking very little, and then capturing the next up wave. So in this case, we have the area that we gapped to following Trump's speech was around 237.60. Below that, if we get the gap fill right on the open, it's a little bit below 237. I think I put on there 236.70, 237. If you can get long into this right here, you might be walking right into a reversal and then a move back up of a retest of the highs within the next couple of days. And so that's the first thing that I would look for there. On Friday, right on the open, we failed around 238.25. Tried to roll over, and then we were bought the rest of the day. So if we're bought first thing in the morning, what I'm going to be looking at is how do we behave right here, 238 to 238.25. We don't really come off much on the open, and we get into this area here. We move sideways, and the next move is down, holding below 238, and then I'll look for that pullback to 237. If we work our way into here and then we break to the upside and take out the 238.5 resistance from Friday, then I'll start to think about a move and a retest of the highs, sell some more March calls into that, and go from there. On the IWM side, we're actually below the 138 level, which has worked as a buy for the last 3 weeks. So one time we came in a little bit deep below there. So nothing different here. A close below 137.50, that would interest me. So this is the support zone. It's worked a bunch of times already. We made a new high, similar to the SPY, but a little bit more violent. Made a new high, and very quickly came right back down to the support area. A close below here, we want to be short small caps. We move back into the prior range. All right, so that's on the ETF side. I mean, on the index side, there's not much in play this morning. X is gapping down because no requirement to have U.S.-made steel in the Keystone XL pipeline. In the scheme of things, it's kind of meaningless. It's more of a psychological thing, I guess. So we have seen some wild action in X. We talked about shorting it a couple of weeks ago in this 40 area. It did rip through there, but then very violently the next couple of days came right back down to 36. So you have this range forming now. I'd be looking to short it into pops. High 37s into 38 right here. Making a play back down to the support area down here. So here was Friday. I guess kind of similar to the market overall. Came off hard from 39 to 37 on Thursday. Friday couldn't hold above 38. Now gapping down again on the pipeline news. The other spot to watch for failure is, if it doesn't run up into here, is the support from Friday afternoon was around 37.25. So I have alerts at 37.20. ADXS, they got approval on a joint study. I think it was Amgen maybe. Immunotherapy cancer, that's the biggest area right now. There was actually, I saw something over the weekend, a story that someone with sickle cell anemia was cured for the first time ever using an immunotherapy treatment. So this is going to be really big the next few years. Here's the daily. So it went into the high 20s, I guess, a couple of years ago. Then it failed at 16 on the most recent spike on good news. It's made a series of lower highs, but a pretty tight consolidation here. To get some news to actually break to the upside and close up here, you could start to see some chase. So 9.5 is support, 10.5 and 11.20 are the two closest resistance areas. So the first thing to look for is a flush below $10. Where does that take it? Ideally, you get something closer to the support, to not down to like 960 or something like that. Going to move back up to 10, and then we would see. If we don't get the flush all the way down there, I would watch right below $10. If it just flushes a little bit below, gets back above 10, then look for the move up to the two resistance areas. The next one is PTCT. They filed an NDA with the FDA for a drug that's being sold in 25 countries and in Europe. I think I didn't do deep dive into what's going on here, but we do have now a situation with Trump and what they're doing with the various executive branches. They're rolling back regulations. Trump has publicly said that the FDA isn't approving things quickly enough. We generally have higher standards here than a lot of other countries in terms of the process for getting things approved. And so if people, and then we had news on this the other day. We talked about the 12 resistance. It actually failed at this 12 and came right back down to below $10. If people though believe that company get drugs approved that weren't getting approved before, that could get them going, especially these small biotechs. So it was already up above 11.5, came back down to 10, so pretty wild pre-market. So let's be aware when we see wild swings in the pre-market, sometimes that is a precursor to the activity right on the open. We know that PTC, when we talked about it the other day, has this history of this huge gaps and reversals. But certainly, I would look to play it off of the halves and the whole number. So right on the open, 10.5, if it's holding above there, I would look for a rip back up to the pre-market high and the 12 where it failed the other day last week. And then finally, GM. It's been talked about for a while that they were going to sell this unit, the European Opal unit. That event happened. Right now, we have the sell the new situation. I saw a couple upgrades on the stock daily. So it's been a big mess the last few years. It's basically, it had a huge run from 20 to 40, doubled. And then since then, it's had a bunch of failures and lower highs. And then it finally broke out of that pattern recently with this move right here back at the end of last year. Let's zoom in on that. Where it ripped back up above 36, came down, tested 35 once, twice, and really was holding higher, and was looking like it was going to make a move back to 40 where it topped out a couple of years ago. And we'll see if we get that over the next couple of weeks. Here's the reaction from the news. It was bought last week at 37.30 on Wednesday, Thursday. Then was bought a little bit higher here, 37.60. So I guess for the levels that I put on the AM sheet, I guess I put in the longer, most recent kind of lows. But if we look at it over the last couple of days where it was being bought, it was a little bit higher here, about 37.30. So that's the first spot I'll look for. It's about $1 above where it had resistance on Friday, right here. Look for a nibble right there. And confirmation of it reversing from there would be getting back above 37.60. So it's already done that in the pre-market. Let's see what happens when the market opens. But ideally a flush in the pre-market here. Comes back up on the open into this zone here where it failed in the pre-market, I'll look for a rollover from here around 38.30. Confirmation there would be hold below 38. But from a bigger picture perspective, getting it into like a lot of weakness tomorrow probably a good thing for a move back up to $40 over the longer term. And then a few things. VRX, we know put in a low. The news flow's been not good for this one. Now, a story came out the other day that drove it down, which was based on something from a couple of years ago. So, but the psychology is so bad right now. You can kind of see 17 all the way back down to 13. It reminds me a little bit of Twitter when that bottomed last year at 14, but this one has even much worse fundamentals than Twitter. Ideally in the situation now that you have kind of the low and the little higher low and the low again, is even like a week of it holding down below $14 here, spending most of its time between 13 and a half. If you can get a base down there and then a move out of it, that might be some sort of sustainable move. But you can see some, it's had some wild moves off of this 13 already, back into the 17, 18 area a few times. Weight Watchers, we looked at that the other day, bought it in the 16s. It ran up to 19.5, 20, something like that. Then we got 2 days of consolidation, so that's very nice. I mean, ideally, what you want to have happen is after this big of a move, you want the stock to move sideways for a while to give the kind of the moving averages a chance to capture, even though we don't look at those, but that's what a lot of other traders are looking at. They're saying, okay, it's moving sideways. More people are now willing to buy it now above $17. We can get 1 or 2 more days here before we break back above 18. We might have a sustainable move to $20. So 18 to 1830 resistance, 18.5 support that I put on there, 17.5 and 17. And then finally Snap. Snap is just a really nice trading vehicle, should continue to be so for at least a few days. IPO price was 17, day one made a nice run to 26, came in a couple of dollars. Friday was the bigger move. People pushed it through 29. The price action up here was wild. That was a good enough reason to short it. It did come off a couple of bucks from there. Now what we want to see is clearly buyers in control from a bigger picture perspective. But the one thing you'll look for is, does it have a lower high? If it puts in a lower high right on the open and then starts to hold below 27.5, you would look for a test of Friday support, and then we would see what would happen from there. So I shorted a little bit here in the 28.30s in the pre-market. It flushed down one time to below 28, but right now they're buying it back up. So buyers still in control here. Truth is going to be, what does it do right on the open? It looks like, does it fail here at 29, make a lower high, or does it actually consolidate here, break through Friday's high, and then they test 30 or 31 or something like that? I'm willing to play both sides of it, and just don't be stubborn. If you can risk 20 cents a few times, you probably catch $1 plus in it at least once today. That's it. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.